price, we checked at that is the triangle. We are done with the chart patterns strategy. Okay, so we are now working with the price rejection strategy. Price rejection strategy is whereby we will be using the pin bars, that is the candlestick. If you have not watched my video on candlesticks, please do so. It's very important. So price rejection pin bars are very strong signals that largely help you to make a right trading decision. I highly recommend you to use them in your trading. Okay? Make sure you use price rejection when trading. Why do I advise this? Before I move to the chart, let me say this. Please, when you want to use a price rejection, based on my experience as a trader, please use that using the daily time frame. Very nice. Very nice. You will never go wrong. Okay, we move to the price rejection strategy. So first we will check on the price rejection, that is a price rejection resistance. Okay, resistance level. A strong price rejection at the resistance level push the market downwards. So this is now the resistance at this point. The areas of resistance. Okay, this is a zone. Is a zone, can be a zone up to a point like this. Okay, so market goes down. Okay, the price has been rejected. You can also see this. You can see this candlestick with a long tail and a very small body. Okay, it's called the hanging what? The evening star. Is it a morning star or an evening star? Go to the candlestick patterns, you check. So this pin bar, you can see the way the tail is long and a very small body. Almost at the same point the market opened. On a daily time frame will be good at this. So this marks you that the price is going downwards. After the pin bar, you can see all this. The price is going downwards. That is the resistance level 1. Let us move to the next. We see what I explained to you what we have. Sorry, we are having that. So at this point we are also having price rejection points on a downtrend. Okay, when the pin bars are being formed on a downtrend, check the first pin bar. The first pin bar was this. This one came. The body is very small and the tail is high, shows a reversal. So the market is still forming as pin bar. You can see it went up and formed another pin bar. This one will shows that the market is still being pulled downwards. Okay, here it's also forming other pin bars, shows the market is still being pulled downwards. Don't see these pin bars and then you start buying. My friend, you will lose money. Okay? So I want to check this on a live chart for you to understand what I am saying. I love using the live chart because that is what you will be using to trade. What do we have? We can also check, combine this, the price rejection on an uptrend. Okay, price rejection on an uptrend. Okay, then we can check that on our chart. Then we can move to the next stuff. So price rejection on a rejection pin bars on an uptrend. Or we check, let us check the downtrend. Then we can check the uptrend later. Because I don't want to combine them, maybe you can get confused, especially for the beginners. Experts, you can continue, you can go ahead of me. Let me go with the beginners. Okay, the beginners, I want to show you the pin bars for the downtrend and how you can trade them. Okay, for the downtrend first. For the downtrend first, we go to our chart. Let me use the hourly chart. Hourly or daily? Let me use daily. Okay, what are we checking on? Is on the downward trade? Yes. Yes, and I can see something. I can see something similar to what I am looking at. But let me zoom to see well. Here it is. Here it is. You can see the pin bars. The way pin bars are mob. Here. There was there is a pin bar. You can see. You can see. Even this one was forming almost a doji. The pin bars, the tilts are high. The tilts are high. Then after this one, the tilt disappeared. Okay? It become an uptrend. Let me check another one. I can combine an uptrend because I have shown you this. Want to show you a very nice example. A very nice example. You can see this one, there was a pin bar here. The price dropped. Please remember that there was another pin bar, which is a hammer. This is what we called hammer, and the price went up. Please do not take this for granted. Remember that we are on a daily time frame. From here, my friend, let me show you. From here, where I'm quoting that pin bar, to here, it's 286 pips. So it's not a small. That is even enough for even a week when you have good lot size. So you can see the pin bars that are formed. There is another one here. Let me zoom a little. This is formed. This is formed. You see, there is another one here. This is an indication that the market is still going down. Okay. So pin bars are there that have the longer tail, then the market is pulled downwards. When we come to the upward, it's opposite of what we are saying now. But let get prepared. We check the uptrend, then we can continue with this price rejection. We are now covering price rejection strategies. how the price are rejected and how the candles pull back. We looked at the candles. Those are the don'ts, pullback, hammer, morning star, evening star, all that. Please check the video that I did on Japanese candlesticks. Everything is there, so you will understand what I mean by all these dodges and everything. So let me check what we have next. I think what next we can we have checked the downward trade, so I think we can check the upward. The way this is what we call the hammer. This is what we call the hammer. This one. Okay, so we will check also this one and how you can trade it. Have we checked how you can trade this? Oh, before I forget, please, after the doji you can place your, let me show you, sell, sell, sell. So there are so many indicators of sell. Sell, sell, okay, but you sell when there are candlesticks on the lower time frames that are moving at that point. Okay, yes. So thank you. This is how you go. Here we are targeting sell, as I have told you. We are doing sell on this. We sell at this point. The take profits, I told you how you can set your take profit. Make sure that it is above the turning points of the market. At that point you are safe. Use as a good volume. You will not struggle in Forex. That one will manage your psychology, and you will budget yourself to know exactly what you are ready to risk in the market and what you are not ready to risk. So next we are checking the upward trade. We see what is offering us. Yes, so we are continuing direct. I'm just ending the clip, then we can proceed.